Hi there, thanks for coming back to the channel. My name is Mike Pitt. I make videos about marketing, business and crypto so that you can grow your business, increase your profits and increase your portfolios. The title for today's video is What Went Wrong with Terra Luna. Keep watching and I'll give you my thoughts. Before I get into the main content of the video, I'm going to put my socials on screen here. So if you're active on any of those platforms, connect with me there and I will reciprocate, send you messages and we can communicate on those platforms too. I notice that the TikTok people are particularly lively, so welcome everybody from TikTok or everybody to TikTok if they want to go and follow me there. Okay, Terra Luna. For those of you who haven't seen my video, and I'll put a screenshot or a thumbnail of the video which said, is it too late to invest or to buy Terra Luna? So I went into detail, it's a bit of a deep dive about Terra Luna, how it's set up. Let me just summarize that very briefly now. So Terra Luna was an algorithmic stablecoin. A stablecoin, as the name suggests, is balanced, so the value is always around the same level, which is $1. So in the case of Terra Luna, it balanced UST, that's Terra USD, known in trading terms as UST. That's UST is the reference, the short abbreviation for it, and Luna. So as what the Terra Luna Foundation did was, as more UST comes into the market, Terra Luna would burn Luna to equalize the two and keep the UST pegged at $1. That was the whole point of Terra Luna. It seemed to be based on a clever algorithm and was working very well. And Terra Luna as a token was one of the winners, big winners of 2021. And the value of Terra Luna went up over 12,000% during 2021. So that's it's a balancing act based on an algorithm between UST and Terra Luna. Okay, what went wrong with Terra Luna? A bit more explanation is required. Most of the use case, most of the need for UST came from one particular initiative, and that was the Anchor protocol. And I've made reference to the Anchor protocol in a video I did about DeFi, so I'll put the link to that in the description, and also in some TikToks. And the Anchor protocol is important because it was offering people the chance to earn 20% APY, annual percentage yield, the equivalent to interest rates in the traditional banking structure. It was offering people the chance to earn 20% APY if they put their UST into the project and helped operate the Anchor protocol. So that's a very good and strong incentive. Most of the people who were using UST, therefore, were using UST for the sole purpose, almost exclusively, for Anchor protocol, to put their UST into Anchor protocol and then earn 20%, which is a very good and competitive interest rate, on an ongoing basis. I've made TikToks and made reference to the fact that I didn't think the 20% was sustainable, and that's proven to be the case. There were announcements recently with Anchor protocol that it's going to go to 19% and it's going to be reduced on a monthly basis. So that's important to take that on board. What does that mean? It means the major requirement for UST based on Anchor protocol was going to change. So if 75%, 80% of the requirement for UST, or the demand for UST, was based on this Anchor protocol, which in turn was based on the 20% interest rate that people could earn, if that were to change, or there were perception that that was to change, or that was to end, there would not be so much demand for UST. And this is exactly what happened. In the last week or so, demand for UST has decreased, i.e. more people are not coming into Anchor protocol, and the people who are in Anchor protocol are realizing we're not going to get this interest rate forever anymore. Not interested. I'm going to chase a higher interest rate, a higher rate of return on an investment somewhere else, anywhere else, but somewhere else. So that means there's a lot of sell pressure on UST. A lot of people in the last few days sold their UST So that means millions and millions of UST coins were coming into the market, which means that Luna, if they're doing that balancing act I spoke about earlier in this video, would need to burn lots of Luna. So in theory, they would need to burn an equivalent amount of Luna, because they're supposed to be pegged, to keep demand high, to retain the balancing act, and also UST must remain at around $1, but also to keep the value of their own token, the Terra Luna token. So millions, actually billions of UST comes into the market, which forces down the price of UST because it's an oversupply, supply and demand. So UST crashes down and is no longer pegged at $1. Also, the Terra Luna token, it crashes down as well. So a few weeks ago, Terra Luna, I remember commenting on Terra Luna, an all-time high of $116, and it crashed in one day. It crashed 93%. I'll reference a TikTok I made just for the capturing the moment. It crashed 93% in one day, and then went lower. It went lower to $2, and then it went down to less than $1, and it's now less than a cent. And you could say, to all intents and purposes, Terra Luna is dead. And why is it important? Why is it dead? Because there's so much UST now. There's so many tokens, and there's so many Luna tokens that their tokens are virtually worthless. I looked at CoinMarketCap, and that keeps track of the total supply of coins, which means that they are worthless. So Terra Luna, even though there was talk of a rescue plan, which in theory would work, burning tokens, but they're going to have to burn so many tokens, and then there's going to have to be a return in, let's say, business confidence around the Terra Luna ecosystem. That's not going to return, because people realize it was UST was being kept at $1, propped up mainly because people were being offered a lucrative incentive on Anchor Protocol, which was based on the Terra ecosystem, the Terra platform. When that was removed, people don't really want UST, which means that it can't be pegged at $1. Price crashes. Also, Terra Luna, which is based on the equalization, the pegging of those two currencies, that also crashes, and there's no way back, because that the volume of coins that would need to be burned and taken out of circulation to bring anything like a reasonable return is too high. So despite some bullish early tweets from Do Kwon, and you remember Do Kwon from my earlier video, obviously he's a leader, he's the founder of Terra Luna. There's no way back. So Terra Luna is dead. So it's very sad times and shocking times for the crypto community, because a much lauded coin, a much lauded project and well respected, crashed phenomenally, more or less in one day. And over the course of a week, lots of people have lost, sometimes some people have lost their life savings, and other people have lost millions individually, have lost millions because of the crash of Terra Luna. So there'll be some regulation following this, i.e. government intervention probably in America following this collapse. But it builds the need for people to do their own research, and I did a video obviously about Terra Luna, and it was a good project to invest in at that time. Obviously, speaking today, 13th of May 2022, it's not a good project to be involved in, and it was obviously artificially propped up, and you don't always know the inner workings of a project. You can only do your research so far with the information that's publicly available. So I just wanted to do a quick video talking about what went wrong. A burning program would not be large enough or quick enough to restore or recover Terra Luna. Thanks for watching all the way through. I hope this explanation has been useful to you. If you've found it useful, please give me a like. Click on one of the two thumbnails to watch another video from me. I look forward to speaking to you in the next video. Take care. Thanks. Bye bye.